In this video, I'll review the first quarter results of one of my REITs, ticker MEAU, Mapletree Industrial Trust, or MIT in short, and give you my opinions of it so that it can help you in your analysis. So I'll go through all the points from their official presentation slides, such as key highlights, business outlook, financials, and translate them into layman terms for you to make it easy for you to understand so that you don't have to. What's up guys, it's Christopher from Honey Money SG, and in this channel we are all about building financial knowledge, teach money saving hacks, and also help you lead a fulfilling quality of life. First up, disclaimer, this is not financial advice, just treat it as entertainment purpose for knowledge sharing, and I must disclose that I personally own shares of Mapletree Industrial Trust as of the video recording date. My holdings is also reviewed in my previous REIT Portfolio video, so you can take a look over here to see why have I invested in it. So with that, let me take you through the official presentation slides for the first quarter result. Let's go. Alright, so let's go through the Mapletree Industrial Trust first quarter 21/22 financial results that was released in 27th of July 2021. Let's start off with the contents. You can see we have key highlights, we have financial performance, followed by portfolio update, investment update, and lastly outlook and strategy. So let's take a look at the key highlights first. We have a few key highlights. We can see that the growth is driven by mainly contributions from North American data centers and absence of rental reliefs for the first quarter. You can see distributable income increased by 83 million, which is around 17.2% year over year. And the DPU, which is one of my most important metric in determining whether a REIT is good, is increased by 16.7% year over year to 3.35 cents. Wow, double digit increase in dividends. That is a very good metric, right? Announced a $1.32 billion acquisition of 29 data centers in USA on 20th May, which is completed on 22nd of July. So that's good because data centers are for the future, right? I talk about this in my Capital DC REIT during my REIT portfolio review on why data centers are important to a company. Next, let's take a look at the portfolio update. Overall, the portfolio occupancy has increased Q on Q from 93.7% to 94.3%. That's good. Increased occupancy means that more tenants are renting from the Mapletree Industrial Trust so they can generate more income. Average rental rate of Singapore portfolio increased Q over Q from $2.05 per square feet per month to 2.13 per square feet per month. So that's good. Average rental rate increased. That means they can generate more revenue as well. Capital management update. They issued around $300 million of perpetual securities at 3.15% yield in May 2021, and they successfully completed an 823 million equity fundraising exercise in June 2021. So that was the preferential offering in June. Okay, next slide, let's look at the sustainable and growing returns. So this is definitely the DPU. We want to focus on the one on the right. Okay, you can see that the full year DPU has increased so much over the years, right? It started at around 8 cents per year to now 12.55 for last year. So this year, 2021/2022, expect to see around 13 cents already. First quarter already delivered 3.35 cents. If you multiply that by 4, that's well above 13 cents. So we'll see whether next year the full year dividend is around 13 cents. Moving on to the financial performance for the first quarter, let's take a look at the statement of profit or loss year over year comparison. So over here, the grey area is the current year, the one on the right is the past year. Gross revenue increased by 29.2%, double digit. Anything that's double digit is optimistic to me. So gross revenue increased by 29% is really impressive. Property operating expenses increased by 14.1%. If your expenses is increasing less than the revenue increase, that's good. That means you're earning more money while using less money to expense it. Net property income increased by 33.1%. Wow. So they increased from $78 million to $104 million. That's a whopping 33% increase in net property income, which is really good. Let's take a look at the borrowing costs increase. Borrowing costs increased year over year by 44%, which is a huge increase as well. Trust expenses increased by 33.2% as well. But if you look at the profit before income tax, it's still an increase despite all the increases in the costs and expenses by 18.7%. which is double digit as well. Very good. Profit for the period after deducting for income tax has increased by 16.7% to $84 million. And I think the most important thing here is the DPU. How much distribution dividends are they paying per unit? Has it increased? So last year for the first quarter they declared around 2.87 cents. Now it's 3.35 cents, which is 16.7% increase. Most importantly, whether this company is returning more dividends to you, that's the most important. Provided their business is profitable. Okay, let's take a look at the quarter-on-quarter performance. So last quarter, in fourth quarter, it was around $121 million revenue. Now it's 128, so that's a 5.8%, so slightly up. But you can see property operating expenses actually decreased by 20%, which is huge, right? You have more revenue but you have lower expenses, so your net property income increased by more than significantly, from $91.8 million to $105 million in net property income. And then we look at the profit and loss before income tax. Last quarter they're actually making a loss, right? Because they have a net fair value loss on investment property and investment property under development. They had a $87 million of fair value loss, but this quarter they don't have that anymore, so that represents a huge increase. But actually this is not meaningful, as depicted by the star here. It says not meaningful, so we shouldn't look at that. We should look at the meaningful numbers, right? Because if we account for the net fair value loss, you can see it's really a huge increase. From loss of $45.8 million, now you increase to 85. I think the more important thing is to look at the adjusted profit and loss if we are disregarding the fair value. Okay, but they didn't write it over here, so I won't talk about it. If you are a beginner, then just look at the distribution per unit. Okay, 3.3 cents, now you increase to 3.35 cents quarter on quarter, 1.5%. Okay, not bad. Still got increase. Okay, statement of financial position. Total assets have increased by 9.4%. Total liabilities have decreased by 18.3%. Overall net assets increased by 19.4%, which is double digit. So if you look at the book value or the net asset value of Mapletree Industrial Trust, it has increased from 1.66 to 1.75, which is 5.4% increase. Very impressive. As long as you look at your net asset value increase, you'll be happy, you know. It means your properties are worth more per unit. Okay, let's take a look at the strong balance sheet. So total debt, last quarter they were close to $2.2 billion. Now it's around $1.8 billion. So they reduced their debt, and I think that's because they also issue a lot of equity shares to finance, right? Weighted average tenor of debt, that means how long their debt is for. 3.6 years reduced to 2.8 years. Leverage ratio decreased so much, from 40.3% to 31%. So it means that now only 31% of their capital is financed by debt instead of 40%, which is a very big decrease, you know. Okay, and here they explain why. 100% of loans unsecured with minimal convenience, and they raised $300 million from the issuance of perpetual securities and $823 million from equity fundraising. Yeah, so they actually raised it from equity instead of debt. That's why their leverage ratio decreased greatly. And they used the money to go and acquire more US portfolio, which is the data centers that we talked about earlier. Okay, this slide will talk about the well-diversified debt maturity profile. Okay, risk management, I won't talk much about this. This is basically about your debt and also the rate that your debt is covering. Portfolio update, let's take a look. They have 114 properties across 6 property segments. You can see that this is their distribution or diversification. Most of it is in data centers now. Last time they are only flatted factories and light industrial buildings. Now they have been so aggressively expanding and acquiring more properties that now data centers is close to 40%. And most of it is actually in North America, USA, instead of Singapore. Singapore only has a small percentage of 4.5%. And the second one is actually high-tech buildings. So you see, Maple Industrial Trust is transitioning from Industrial Trust to Mapletree Technology Trust, you know. Next time you can just call Mapletree Technology Trust really. Okay, don't take my word for it. I'm just guessing only. And you see they have more business park buildings than flatted factories. So all these like flatted factories, ramp-up buildings like industrial buildings are going away in the future, man. Nobody is going to rent them anymore because these are not earning much money. Your tech buildings and data centers are more profitable, which is a good move. And then if you look at the assets under management by geography, Singapore already have 65%. The rest are in North America, mainly US, 35%. Number of properties, Singapore portfolio 86, North American portfolio 28 properties, Singapore net lease area of around 15.9 square feet, and then North America at around 5 million square feet. Occupancy rate, actually North American has a better occupancy rate. That means more tenants are actually renting from Mapletree Industrial. Singapore is only at around 93%, so they have around 7% that's not rented out yet. But if we look at the breakdown segments, data centers is almost fully rented out, 98%. High-tech buildings, close to 99% already. So almost everything is increasing. Okay, Business Park 84%, Flatted Factories 91%, okay, which is the most unperforming one. Okay, light industrial building only 78.7%. So I think less businesses are also renting out their light industrial building because this is just a demand and supply thing. Okay, lease expiry profile, how long is their average lease for each tenant, right? Singapore portfolio is around 2.8 years, which is quite short, even less than 3 years. But you see the North American portfolio, 6 years contract, 6 years property rental contract of recurring revenue. That is a very strong thing. You want your tenants to rent as long as possible. But if you have a short rental agreement, there's also a chance that you want to increase their rental rate after the contract has expired. So good and bad. Large and diversified tenant base. So top 10 tenants by gross rental revenue. HP rented around 7.4% of the revenue. Okay. AT&T, this is an American telco company, and then global social media company, not sure what is that. Oh, global social media company, they don't want to identify this but you can guess there are a few global social media companies that are this large, right? BOA, well, American bank also have. Okay, so you can take a look at mostly US companies. Tenant diversification of cross trade sectors, so mostly in precision engineering, machinery and transport products, around 16.7%. The rest y'all can read yourself. Basically a lot of industrial business area. Singapore portfolio update, basically this tells you the occupancy rate by the quarters or by the years, and also the gross rental rate per square feet per month. Okay, the tax is very small but it's around $2 and still increasing. You can see the slight drop here. I think this is because of COVID, right? You see, second quarter last year, so they need to slash a bit of their rental rates because some tenants will be out of business. Gross rental rate per square feet per month for 1Q. Okay, so this will show you the specific trend of each building. You can see the high-tech building have the most appreciation, right? From 190 to 260 now. And then for Business Park, we remain at around $3.75 for new leases. Flatted Factories, they have to decrease the rate because really no one is going to rent out for Flatted Factories. Okay, the rest not so important. Healthy tenant retention, long-staying tenants more than 4 years. So that means these are long-term tenants that have been paying their rents on time and also good business partner. We want them to be more than 50%, 4 years or less, 36.1%. Retention rate 100% for stack-up buildings. Data centers we don't have yet because there were no leases due for renewal. Yeah, makes sense. Okay, high-tech buildings 68.1%, Business Park 88.3%. All these are very good details. Investment update. Okay, they acquired 29 data centers. Most important is to see whether it's making money for it. Okay, so they are just giving you the details of some of the property, but we won't know if it's making money as of now until they fully acquired and running the business operations there. Overview of the new portfolio. So this is the United States. This is how much of the occupancy is being leased out. 87.8%. 94.1% freehold, and they have a rental escalation of 1.5 to 3% per annum. Okay, most of the properties are actually located in California. We have a few in Texas, Arizona, Minnesota, Illinois, Tennessee. Yeah, actually all across USA. Okay, acquisition of Villa Park Drive. This is located in Virginia in United States, and it's for the Bank of America. Wow, very large space, 701,000 square feet. Triple net leases with balance term more than 5 years. So Bank of America is a very rich tenant, financial services firm. So it's a good tenant to have. It was expiring in 2022, but this with 3 5-year renewal options. Zero base rent from 13 March to 10 June. Rent to commence after 10 June. So they give them some free rent in order to keep them, and it's already completed. Okay, they divested 26A RE Raja Crescent in Singapore. Sale price of 125 million. Gross floor area of around 384,000 square feet. This is the exercise of option to purchase RE Raja Crescent by Equinix Singapore, developed by MIT for Equinix. So MIT developed this property but sold it to Equinix, contributed to around 2% of MIT portfolio gross revenue. Sales price is in line with valuation of 125 million. Divestment gain, yeah, that's the most important thing. Whether you gain from this divestment or you lost money. Most importantly, you gain money, right? If not, you build so much for what? Develop for other people, still lose money. And this will be distributed over 8 quarters of the second quarter. Okay, redevelopment of Kolom Aya 2. So this is their high-tech building. So this was originally the 2 flatted factories with an amenity center, so it's like occupying 506,000 square feet. But now after redevelopment, they will use more of the land to actually optimize the building. They have high-tech buildings, including a 7-story BTS facility for anchor tenant. What's BTS? Did they explain what's BTS? I don't know what's BTS. If you know what's BTS, please write down in the comments. It's definitely not the Korean boy band BTS. Okay, outlook and strategy. Challenging operating environment in view of uncertainty over trajectory of economic recovery from COVID-19 pandemic. Economy grew by 14.3% year over year, ended 30th June, extending the 1.3% growth in preceding quarter. So they're telling you the country of Singapore actually grew by 14.3% compared to last year, while in the March 31st they only grew by 1.3%. So business sentiments have actually improved, but the changes were limited to financial services, manufacturing and services sector. Impact on their Mapletree Singapore portfolio. As of 30th June, rental arrears of more than 1 month was 1.1% of previous 12 months revenue. This is an improvement from 1.2%. So last time some tenants actually owe rental of more than 1 month. Last quarter was around 1.2%. Now it's slightly improved to 1.1%. Not a big change lah. North America, a resilient asset class with growth opportunities. So you can see Mapletree Industrial really ventured out into North America. They buy up so many data centers. Okay, they really want to make an impact there because it's a very good place to really develop your data centers and also have many good tenants down there. And they are expected to grow at a compounded annual growth rate of 7 to 8% between 2019 to 2025. So the pandemic has boosted data center demand and in the short and potentially long term. So there's more demand for infrastructure and sustainable data centers as environmental concerns become more important to local governance and end users. So in line with what I say about data centers, more company is really going to rent the data center property to store their database and all that. Okay, overall diversified and resilience. Okay, they have large tenants, they are anchored by large and diversified tenant base with low dependence, and they focus on tenant retention so that there's a strong relationship, right? You want your tenant to keep renting your place so that your portfolio occupancy rate looks good. Okay, for enhanced financial flexibility, they have more than 900 million of committed facilities available. That means they are able to borrow money very easily. Growth by acquisition and development. So they actually use the money that they borrow or gain through equity finance to acquire more data centers in United States and even in Kallang Way, right? So they're telling you the money that they gain from you is put to good use one, not to play. Okay, take money from you and do no work, earn management fee only. Yeah, so that's the end of the presentation. I hope this has helped you in the Mapletree Industrial financial results analysis. Alright, so I hope the walkthrough of the official presentation slides for my Mapletree Industrial Trust has helped you in your own analysis. And if you have found value in this video, please help me like the video at the bottom and consider subscribing to my channel for more investing related content. Remember to also check out my other videos here which may be relevant for you. My name is Christopher, this is Honey Money SG, steering young adults to financial independence.